Thermo Fisher Scientific stock has taken a hit recently, and it's exactly the kind of setup we spotlight at Insightful Value: undervalued, underappreciated, and potentially misunderstood. If you've been watching the sell-off and wondering whether this is a falling knife or a golden opportunity, you'll want to stay tuned. This review is for informational and educational purposes only and is not financial advice. Thermo Fisher is a giant in the life sciences and laboratory tools space. If you've ever set foot in a lab, academic, government, or pharma, chances are you've interacted with their equipment. From gene sequencing systems and lab reagents to diagnostic kits and analytical instruments, they're the backbone of biotech and healthcare research. But even a juggernaut like this isn't immune to market pessimism. So, what's been driving the downturn? One word: slowdown. After explosive growth during the COVID years, fueled by demand for testing supplies and vaccine-related logistics, the post-pandemic world has brought Thermo Fisher back to a more normalized growth path. Earnings have moderated, guidance has softened, and the market, always forward-looking, has punished the stock. But here's the thing: it might be overreacting. On a value basis, Thermo Fisher is starting to look interesting. The price-to-earnings ratio has pulled back to levels we haven't seen in years. Revenue is still growing, albeit at a more modest pace, and margins remain healthy. The company has a long history of strong cash flows, disciplined capital allocation, and high returns on invested capital. It also pays a dividend, small but consistently growing. A key point for long-term investors is Thermo Fisher's strategic positioning. They aren't just a toolmaker. They've built a vertically integrated empire that spans diagnostics, biosciences, pharma services, and specialty testing. Recent acquisitions, like PPD and the Binding Site, have expanded their capabilities in clinical research and diagnostics, positioning them well for future healthcare trends. Yes, they've spent heavily, but they've also historically demonstrated an ability to integrate and extract value from those acquisitions. The temporary cooling off in earnings shouldn't overshadow the long-term structural tailwinds. Aging populations, personalized medicine, biotech R&D, and global public health infrastructure, all of these themes point to growing demand for exactly what Thermo Fisher provides. Their scale and breadth create a competitive moat that's difficult to replicate. At Insightful Value, we zero in on companies just like this: fundamentally strong, temporarily discounted, and often overlooked in the daily market noise. Our approach simplifies the data, removes the jargon, and focuses on what really matters. Whether you're an experienced investor or just starting out, we give you the tools to think long-term and act with clarity. You can find more insights like this and in-depth breakdowns of other undervalued stocks at InsightfulValue.com. It's where we turn market overreactions into research opportunities. If this video gave you a new angle on Thermo Fisher, don't forget to subscribe to our channel and visit InsightfulValue.com for more. There's a whole world of opportunity out there. You just need to know where to look.